In this video, we are going to be analysing Carnival Cruise Line's ticker CCL. Again, it was recommended by someone in the comments, so if you want your own stock analysed, write in the comments, we'll get round to it when we can. But to get straight into it, we can see actually we are coming down to around, or we're sitting around $10. But really the key thing that we're always going to be paying attention to are what are the standard deviation channels telling us. On the left, we have a 6-month. On the right, we have a 1 year. Now, instantly, I'm a bit put off with trading this, or at least with big size. Reason for that is on the left, you can see that is the 6-month. That is uptrending. On the 1 year chart, though, that is still downtrending. Again, with deviations, it's always easy to see what way the market is trending, by what way are they facing. So they're kind of diverging, which is fine. It just means the short term is more bullish than the long term, or than the longer term. But again, we can see that the levels are still working. So we just hit into our first deviation on the 1 year. That was at around $10.85. You can see we hit that near enough. I think we went through it by maybe about 2 cents. And then we've already pulled back over a point off this level. So levels are still holding up. So I'm still confident to trade them. But again, because the two charts are diverging, usually it just means I reduce size by a tiny bit just to, always be a bit more protected. Now, we are pulling back. What are the key levels? So we have 936, we have our statistical mean. And then also do note at $10.18, we also have our statistical mean, but that on the 6-month. So what this instantly means is right now we're in the area and the range of statistical mean. So to me, that is a non-trading area. Trading within that area, to me, is just a lot more risky. It's a lot more of a gamble. So to me, between the areas of around 1020 and 635, I will not be trading Carnival Cruise Lines. If we continue to downtrend though, and we break down to $9, that is our first deviation. Now, that only gives us a 35-cent upside until we hit statistical mean. So that means I may day trade that as a bounce, but it's not enough opportunity to justify a swing. So just to put that out there, that is a support, but probably not one I'll take with too much size, unless you believe that the trend has now changed to the uptrend. Because don't forget, that is our first deviation. That wouldn't create a lower low. So again, that was two things that kind of signify the uptrend. So if you think the uptrend is going to continue, you could be looking long at that 9, potentially holding through that statistical mean. Again, that is taking on extra risk alone. But again, you could have a relatively tight stop. You could have, a stop below 870. Because again, if we're breaking that, then we're breaking the lows. And then again, we may go to that longer 1 year trend of being more of a downtrend. So just wanted to point that out. If we break lower though, these are the key supports I'd be paying attention to. And that's going to be around $7.85. That's our second deviation on the 6-month, first deviation on the 1 year. Strong layer of support. If we break that, I'm paying attention to around 670 to around 640. Again, using that as a zone because it's quite tight. And that's going to be our third deviation on the 6-month and our second deviation on the 1 year. Now, because it includes a third deviation, this is a really high probability trade. You can see on the chart where we have those green lines, the green line is really my favorite line to trade off. That is really the highest probability trade. If you come into that, 9 times out of 10 you are getting that bounce, and a lot of the times that overall reversal. So really paying attention to that if we could come all the way down to that. On the other hand though, those are the key supports. Just to note the resistances, if we come back to retest that 1085, only pay attention to that as a resistance if we hit 935 first. If we don't hit that, then again, we're paying attention to 1135. And if we break that, looking at 1230 to 1250 as upper resistances. And really that's what I'd pay attention to for the time being. Again, if we break out of it, either of those sides, obviously we'll make an updated video. But right now, I do think we'll continue to pull back to at least really $9. And then it's just a reaction we get from there. Do we break it, come back to retest it as a resistance and it holds? If so, 780 as a target. If we come back down to $9, we bounce. Really then waiting for a move above 1080 before we really look for that next trading opportunity. That's why to me I said I'll probably avoid that $9. I don't think it can justify a great trade unless you're trying to capture the uptrend that could be forming. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this video here.